So we will transition to our next anticipated session on the changes in charitable trust by Dr. Manoj Fogla, Suresh Kejriwal, and Tarun Kumar Madaan. Dr. Manoj Fogla is a senior partner at SAGA Law LLP. He is a fellow chartered accountant, law graduate, and PhD holder from Utkal University. Dr. Fogla has devoted over 3 decades of taxation, CSR, and FCRA governance. He advises diverse charitable organizations in education, religion, and environment, providing advisory services, compliance management, and litigation support. He is the author of Taxmann Trust and NGOs and has produced multiple FAQs on GST and FCRA for the ICA. A frequent speaker at national and international forums, Dr. Fogla is recognized for his extensive contribution to NPO governance. And the next speaker is Suresh Kejriwal, partner at Kejriwal, Agarwal and Company. With over 30 years of experience, Mr. Kejriwal is a chartered accountant and founding partner of Agarwal Kejriwal and Co. in Kolkata. He specializes in the NGO sector across India, Bangladesh, and Nepal. He is a faculty member for the Diploma in Financial Management and Accountability at Tata Institute of Social Sciences in partnership with the Financial Management Service Foundation, formerly part of ICS Cooperative and NGO Sectors Committee. Suresh is an associate author of Taxation of Trust and NGO by Taxmann and has contributed to ICS GST FAQs and NPOs. He is a seasoned speaker leading workshops and seminars on NGO-related topics for numerous organizations, including the ICI. Tarun Kumar Madaan, Lead Business Advisory at Coherent Advisors. Mr. Madaan is a qualified chartered accountant focusing on taxation, startup, consulting, and NGO advisory. Over the years, he has mentored multiple startups and consulted for NGOs across India, offering guidance on organizational setup, accounting process, tax compliances, due diligence, and fundraising. He regularly contributes articles on income tax and NGO matters to prominent publications. Tarun also holds a diploma in international taxation from ICI and is a commerce graduate from Punjab University, Chandigarh. Previously, he has served as a faculty for the income tax module of TAP course and Taxmann Academy. A very warm welcome to three of you all.
Yeah. Good afternoon.
Good afternoon, sir.
Yeah. So, Tarun, today we will be talking on charities. Budget 2025, if you look at the amendment, it will give an impression that not much has changed as far as the taxation of charity is concerned. There are few amendments, but in the larger context of the charities, these amendments also will have far-reaching implications. And the structural change which the government is promising in the recent past and through the proposed finance bill, how they actually help the charities will try to discuss. We have structured today's session in such a manner that I'll provide an overview of the amendments, and then we will technically try to understand the actual interpretations and the implications by going through the statutes and the exact changes, because there are many things which has to be read between the lines and which are not apparent from a plain reading per se. But before that, let me give you a context. This year, the charity amendments have come with regard to the smaller charities. Primarily, the amendments say that smaller charities which have registration under Section 12AB will be allowed to continue their registration for 10 years. And there are 2-3 other amendments which talk about there was a weird provision in the Income Tax Act, an archaic law, that a charitable organization has to report uh, about the donor who has contributed 50,000 rupees or more, not only in the previous year, aggregate over past 20-30 years. And even the relative of such donor were required to be, information was required to be given, which was a practically infeasible provision. So that also has been deleted. And there have been some additions regarding the change, the powers of the commissioner with regard initiation of cancellation proceeding. But if you look at the charities, this year amendment suggests that smaller charity will have a longer duration of uh, their registration certificate. The intent might be good, but in reality, they would not be getting that benefit that we are going to discuss. But if you see, the structure of our law in India is such that charities are regulated based on their registration certificate. They are not regulated based on the amount of money they are mobilizing or amount of income they are using or the type of work they are doing, which ideally should have been the manner for regulating a charity. Today, a charitable organization having 12 baby registration, it comes under regulations the moment its income exceeds 2.5 lakh rupees. And with a 2.5 lakh rupees income, it is subject to hell lot of compliances, Form 10 BB, ITR 7, books of accounts under Rule 17A, which are virtually a myriads of books and documents are prescribed. So it was quite unfair to expect small, very small, tiny micro charities to be subject to various kinds of compliances, because the regulatory scheme is such that it is based on the registration of charity rather than the quantum of money they are using or the nature of activity in which they are engaged, which ideally should have been the criteria for regulation, which is the criteria for regulation for other SSCs. For instance, tax audit and various other audits, special audits under Income Tax Act are basically based on the nature of that particular transaction or the quantum of that particular transaction. But that is not the case in case of charities. And that is the root cause of various kinds of problems which the charity sector is facing. I will give you one or two examples. For instance, a charitable organization receiving substantial grant from government is exempt from all kinds of compliances except filing return. So you are a charitable organization, whether government control or a private charitable organization. If you receive even 100 crore rupees grant from government, you are not subject to any regulation under Section 1023C, 3AB, and 3AAC, where substantially funded organizations are totally exempt. This is weird because an organization working, managing on public fund is not subject to any compliance or oversight. On the contrary, a charity working from its own private tax-paid fund or funds collected through tax-paying SSCs is subject to so many conditions the moment it crosses 2.5 lakh rupees. So it is a kind of paradox. You manage hundreds of crores rupees. If you are government funded, you are not subject to any regulation. You manage 2.5 lakh rupees, you are subject to so many regulations. Similarly, if you are an educational institution, so up to 5 crore of your rupees, you don't even need registration, and you are virtually unregulated, and you are not subject to the condition of utilizing money for charitable purposes to a particular limit. For instance, charitable organizations are required to apply up to 85% of their income. So these kind of arbitrariness in the act needs to be addressed, and we hope it will be addressed maybe in the finance bill or in times to come. And maybe government is also mindful of this kind of arbitrariness, and a step has been taken to weed out some of such arbitrariness in the budget to 25. And the primary step which the government has taken is giving the smaller charity a bigger tenure. They will be allowed to a 10-year registration, so that they don't go through the grind of getting themselves renewed every 5 years. But the amendment is structured in such a way that all existing charities cannot avail this benefit. Most of the prospective charities cannot avail this benefit. The organizations who will avail this benefit of 10-year certificate for all practical purposes will be not getting any benefit out of it, because they will have to do the same grinding for ATG every 5 years. So basically these amendments, and similarly we have these kinds of issues with the other amendments, and because they require technical attention, I would we have structured, and I would request Suresh ji to run us through the exact amendment and the exact issues which are arising out of these amendments. So with these brief words, I invite Tarun and Suresh ji to first run us through the amendments.
Suresh sir, you are on mute.
Uh, thank you, Manoj ji, for setting the tone for today's discussion. And in this year budget document, at least ministry has recognized by mentioning that the registration requirement are uniform across all the organizations, and even a charity of 10 lakhs are going to have the same process with a charity of 100 crores. So the ministry has recognized that there has to be some leeway or some area of comfort for a small charities, and based upon that, I think this year charity exemption certificates have been proposed. Now let me share my PPT. This is clear, Tarunji?
Yes, sir. Perfect.
Okay. So there are basically three major amendments. The one amendment is the period of validity of registration for small charities, which they have defined which charities shall be called as small charities, where the registration period shall be 10 years instead of 5 years. Secondly, they have also modified the provisions for a specified violation leading to cancellation, and they provide that minor default will not result into a specified violation, which will result into a cancellation. And they have also provided for modification in relaxation in the definition of a specified person under section 17(3). That is basically the the substantial contributor. Earlier it was 50,000 per year. Now they have modified this limit, and some additional implication may be on the updated returns and the TDS provisions in these two amendments will also have an impact on the NGO sector. Now to start with the period of validity of registration for smaller charities. Now, the budget document has recognized on record that the currently regular registration to a trust or institution is granted for a period of 5 years, and provisional registrations where activity has not yet commenced are granted for 3 years. And they have gone mentioning that the registration requirement are uniform for all the organizations, meaning a small charity with an income of 10 lakhs is subject to same compliance requirement as a charity with an income of 100 crores. And based upon this understanding, the ministry has proposed an amendment, and they have inserted a proviso in section 12AB1. 12AB is a process of registering an organization and giving a certificate of registration. Under 12A1, the application is made. Under section 12AB, the CIT exemption issues the certificate. And here the proviso says where an application is made under subclause 1 to 5 of the said clause and the total income of the such trust or institutions without giving effect of the provisions of section 1112 does not exceed rupees 5 crore during each of the 2 previous years preceding the financial previous year in which the application is made, the provision of subsection shall have effects for the words 5 years, the word 10 years shall be substituted. That means they are providing if the total income of the trust, applicant trust, is less than 5 crore, now doesn't exceed rupees 5 crore in each of the 2 previous year, then the registration shall be granted to such organization shall be for 5 years, shall be for 10 years instead of 10 years. So what is the proposed amendment? The proposed amendment says the validity of registration period from 5 years to 10 years, provided the income before exemption under section 1112 doesn't exceed rupees 5 crore in each of the 2 previous years preceding the year of application, and application is made in section 12A1 AC 1 to 5. That means only for the application made in 1 to 5 clauses, this small charity relaxation has been given. So the condition is the income doesn't exceed 5 crore in the two previous year preceding the year of application. Suppose you are making application in the financial year 25-26, then the preceding 2 years, that means 23-24 and 24-25, the income has to be doesn't exceed 5 crore. Then only this relaxation will be granted for certificate for 10 years. Now the first issue is whether the benefit extend to all categories of applicant. The sections itself says, newly inserted section says, the registration applicant under subclause 1 to 5. What is 1 into 5? Clause 1 says re-registration for 5 years for existing 1421 registered organizations, which we have in most of the cases, this has already been completed. Now, renewal of registrations, 1 year registration period expires every 5 years, you have to apply for renewal. So for such renewal, this relaxation shall be available provided the charities are small charities. Then the provisional registrations are also need to be converted to a regular registration within 6 months of the commencement of charitable activity. In such cases, the subclause 3 application shall also be subject to the relaxation. And reactivation of the inoperative registration under subclause 4 shall also be under the relaxation provisions, and also for the registration on the modified objects. So basically, renewal, conversion of provisional registration to regular registrations are all covered under the new relaxation proposals. What they have not covered is the subclause 6. And the subclause 6 where the first time application or the new applications are made for registrations. So I don't know why they have not covered this, but technically they have not covered this 10 years relaxation to NGOs who are applying first time for the registration under clause 6A or clause B. Now the second issue is what shall be the effective date of amendment. The amendment says it shall be from 1/4/25, and therefore it is unclear whether this applied to the registration certificate granted on or after 1/4/25 or to applications made after this date. As per our understanding, the amendment has been made in section 12AB1, which outlines the procedure for registrations or cancellation of registration by the principal commissioner or commissioner on receiving an application under section 12A1AC. So the applications are made under 12A1 and the process of registration is done under section 12AB, and the amendment has been made under section 12AB and not under 12A1. And that's why, as per our understanding, the registration certificate issued on or after 1/4/25 will be valid for 10 years if the organization meets the specified criteria, irrespective of the date of application in which the application has been made. And therefore, consequently, all pending applications for 5-year registration, including the application for regularizing provisional registration, should be issued for 10 years if these are processed and granted on or after 1/4/25. That means all the pending applications for renewals, all the pending applications for conversion to a regular registrations, if they are processed after 1/4/25, then we understand the certificate granted should be for 10 years. Now, what are the implications for the different type of registrations? For re-registration under clause 1, this was a window for making a fresh registration under section 12AB by an existing organizations under section existing organizations which are registered under section 1/4 on 1/4/21. Now this window, this timeline has completed, but still after the last budget has given a window to apply for this registration after continuation of delay. We understand if anybody is applying for a 5-year registration because they have not yet applied after continuation of delay, and if the delay is granted, and if such certificate is granted to them on or after 1/4/25, then this certificate shall also be for a period of 10 years. Now, renewal of regular registrations, again, all these applications having validity for the assessment year 26-27, we need to apply application by 30th/9/25, meaning thereby all the charities, if meeting the criteria for small charities, meaning thereby in most of the cases, if they are submitting 10 BB audit report, meaning thereby they have a turnover, they have an income less than 5 crore, I think those charities may be covered by this small charities, and they should be granted a 10 years registration. Now, conversion of provisional registration to regular registration, again covered under the relaxation of 10 years, provided they meet the criteria. Now, the new registration where the charitable activity has not yet commenced, and we all know in such cases provisional registration shall be granted, and there is no change in the period of registration for the provisional registration, and in all such cases the provisional registration regular registrations, once the activities has been commenced, in such cases, the 10 years registration shall be granted if these are processed on or after 1/4/25. Now, where charitable activities have commenced, the new cases, but the charitable activity has already commenced, in such cases, as clause 6 has not been covered by the amended provisions, in such cases, even be submitting form number 10 AB, even if our total income is less than 5 crore, the new registration shall be granted only for 5 years. Only when they go for renewal after 5 years, then only they can apply for they can get a 10 years registrations. And ironically, there is no consequential change in ATG approval. So the 12 BB may be for 10 years for small charities, but the same charities, as because no consequential amendment has been made for ATG, that shall be only for 5 years. And that means ATG approval needs to be revalidated every 5 years. Tarunji?
Sir, now a very important question comes that the scheme of registration is such that entity can apply directly even before the commencement of activities or after the commencement of activities. If they are applying before the commencement of activities, they have to apply for provisional registration. Then after commencement of activities, that provisional registration has to be converted into regular registration. Another option is that they can apply directly for the regular registration. Now, after this amendment, which route is beneficial for them?
And we have to understand that we are not sure why clause 6, under which first time application is made, whether for regular registration after commencement of activities or provisional registration, this clause has been not covered. So once this clause is not covered, both type of organization at the time of making application are not eligible. But what happens if an organization applies for provisional registration, then later on it is required to convert that provisional registration under clause 3. And because clause 3 is covered under 5-year benefit, so the organizations which will apply for provisional registration first and then later on get it converted in clause 3, they will get 10-year certificate. But all organizations applying for the first time under clause 6 are not covered under this clause. Now the problem is that most of the charitable organizations, except barring exceptions, when they come for application, they would have commenced some activity. They would have spent some money. So if you see, for all practical purposes, existing organization cannot get the 10-year benefit. The existing organization will get 10-year benefit only when they get their certificate renewed, whenever 5 years are completed. And new organization, most of them will not get the benefit, because once you have commenced the activity, you will get your regular registration under clause 6 itself. So all practical, so there is a very small window of organization who will apply for provisional, then get it converted. Only those organizations will be benefited out of this provision, and the organization which will be benefited will be benefited in future when they get their 5 year certificate renewed. Barring that, no organization in the country will be benefited out of this amendment. So that is why it is slightly surprising in the light of the impending finance direct tax code and the new finance bill, why this benefit was given in the interim period, which is not available in the interim period.
Sir, another important question, which is regarding the effective date of this amendment. The reason is that suppose if I have filed an application today, or if I am supposed to file application in the month of February or March, will I be granted the registration for 10 years or 5 years? Or ideally, NGOs should wait to apply after 1st of April, or they can apply today and they will receive registration certificate of 10 years after 1st April 25.
Suresh?
As I've told that the amendment is made under section 12AB, and the 12AB is the section where applications are, when the applications are received, then how the CIT will process that application. Okay, so there is no change in section 12A1, which provides for the requirement of submitting application or the timeline for submitting the applications. And the period of 5 years and 5 years was mentioned only under section 12AB. And this is the power of the CIT to grant approval for 5 years or 3 years, as the case may be. So we understand as a section, as a proviso has been added only under section 12AB and not under section 12(1) is C. I think this the amendment shall be on the basis of the date of the order. If the order date is after 1/4 on or after 1/4/25, I think the amended provisions shall apply, irrespective of the date of application being made.
Sir, now after the amendment by the Finance Act 2020, wherein all the NGOs which were registered prior to 1st of April 21, they all were required to get themselves re-registered, and the due date was extended to file application multiple times, and the latest due date was 30th of June 24. They all were granted registration certificate for 5 years period till assessment year 26-27. Now, will their existing registration certificate will get extended from 5 years to 10 years, or they need to apply for renewal?
Now, as we understand, the organizations have been issued a very specific certificate which specifies the assessment years for which the certificate is valid. And the certificate was issued in the past. There is nothing in the Act to suggest that it will have a retrospective applicability. That certificate issued in the past for smaller organization would automatically get converted. And otherwise also it would not be possible, because this benefit has come with some riders. Because this amendment says the small organization should have turnover of less than 5 crore in 2 preceding years. So now an organization which was given a renewal certificate in the past for 2 year, 3 year, 5 year, those certificate cannot be amended without a due diligence and verification whether the turnover exceeded 5 crore rupees. So therefore, in our understanding, neither it is provided in the Act, nor it is technically possible to extend the existing certificates. Therefore, the existing organization will continue to have a 5 year registration unless CBDT, exercising its power under 119, converts those certificate into a 10-year certificate.
Sir, now under this amended proviso, the one of condition is that in the previous 2 years, your income should not exceed 5 crore rupees. Now, which 2 years has to be seen? That comes a question. For example, we are applying in the month of April. So in the month of April 25, we have to see 24-25 and 23-24, or the years for which audit report and income tax return has already been filed and accounts have been finalized. So which 2 previous years have to be seen to qualify an entity as a small charity?
There are 2 aspects to this query. One is that what would be the compliance requirement, which audited statement we should be uploading at the time. Suppose you are applying in April or May, you might be aware that your turnover is less than or more than 5 crore, but your audited statement would not be available with you. So to our understanding, at the time of the passing of the order, the immediately preceding previous year, financial year, would be relevant as far as the issue of certificate is concerned. But if you are applying in April, if you are applying in April or May, you may upload the 2 years preceding to that. But the 2 years preceding to the date of the order, to financial year preceding to the date of the order, should be technically relevant. It cannot happen that you had 2 years and in the subsequent year you have more than 5 years and you still will get the certificate. This question becomes more important because nothing in the act is mentioned about once a charitable organization gets a 10-year certificate, what will happen. Our understanding is that even if its turnover exceeds 5 years during this 10-year period, there is no provision to convert or withdraw or reduce the tenure of the certificate. So to keep it simple, uploading requirement as per the act, if your audit timelines were not due, you need not upload that particular year's audited statement. But on the date of the issue of the order, this CIT has to see the immediately to preceding financial year whether you have exceeded 5 years, 5 crore or not. Suresh ji,
Yeah. I go by your understanding. But the problem is that in the present form, there is no such 2 years conditions in the when we submit the form. And maybe at the time of getting it registered, the CIT by way of a questionnaire may ask for all these details. What is your total income preceding the year of applications? The issue will come up when you have made application in suppose next year February, and then the previous 2 years shall be 23, 24, and 24, 25. And but the CIT makes processing the next subsequent year. So I think 2 years from preceding the year of application, that should be the these 2 years should be examined. Suppose CIT process your application in the after April 26. So in this year, this 2 years challenge might be there. Otherwise, I think at the time of giving the certificate, the CIT should examine whether the preceding 2 years conditions have been followed or not.
So now another important question is regarding that 5 crore limits. It says that your total income before exemption under section 11 and 12 shall not exceed 5 crore rupees. Now, how to compute this 5 crore limit? Like whether the incomes which are exempted, like the corpus donations, if invested into permissible modes, are not form part of the total income, whether such income shall be excluded for the purpose of checking the limit of 5 crore. And these questions become more relevant in the context of filing of audit reports as well, because like whether audit report has to be filed in form 10B or 10BB, a similar criteria has been mentioned of regarding the total income of 5 crore, that how to compute this 5 crore limits.
look, to compute the 5 crore limit, the simple thumb rule you have to apply that whatever was subject to 85% application should determine that limit. But when we try to apply this thumb rule, the confusion comes that corpus donation is not subject to 85%. So therefore, will corpus donation be excluded? No, corpus donation will not be excluded because corpus donation was also subject to 85%, but it has been specifically exempted. So corpus donation is treated as deemed contribution, deemed application under section 11(1)(d). So for that simple reason, so whatever is your total income, the problem again or this confusion persists because the total income for the purposes of charitable organization is not the total income which we understand under section 2 subsection 45, which is computed under 5 heads of income. Because charity's income is computed in a commercial sense, and that commercial sense and the scope of that commercial sense has not been defined anywhere in the act. So we take a constructive and common sense definition of this total income is that whatever is otherwise applicable. So for instance, Agricultural income is not subject to 85%. If you see section 11(7), so it has been specifically excluded to be added to the total income. So whatever forms a part of the total income, even if it is exempted, to be excluded at the threshold itself. So corpus donation is one income which is excluded at the threshold. Therefore, it creates a confusion, but corpus donation should be included for the purposes of determining this 5 crore limit.
Sir, now this provision has been introduced, and Finance Minister, while reading a budget speech, said that this benefit is specifically mentioned for the small charitable organizations. Suppose a NGO has been granted a registration certificate of 10 years. Now, in the third or fourth year, its total income surpasses 5 crores. Whether it need to get a 5-year certificate fresh, or the existing certificate of 10 years shall continue.
Suresh?
Because there is no change in the compliance mechanism on the basis of a 10 years registration certificate. In the case of a 1023C, up to 5 crore and beyond 5 crore, there are two specific provisions. And beyond 5 crores, there are different provisions to apply. And there, the approval was necessary. But here, either you are 5 years registration charity or a 10 years registration charity, your operational mechanism are same. So there is no fundamental change in the compliances other than the 10BB and 10B report. Okay, so I don't think there will be any change requirement for getting the certificate again redo for 5 years.
So now charitable organizations are mostly registered under 12AB, and also they get ATG approval to collect the donations and to pass on the benefit to the donors. The amendment for small charities has been proposed under 12AB, but no corresponding amendment has been proposed in section ATG approval categories. So what exactly would have been the intent of the government, or whether they have been missed out passing on this benefit?
No, this is a bit surprising because because the compliance requirement for ATG registration or renewal and 12AB registration or renewal are similar. In such circumstances, making ATG a 5-year certificate and 12AB a 10-year certificate doesn't help the organization in real sense, because in our understanding, this is specifically only for 12-year registration and not for ATG. So ATG certificates will continue for 5 years. The intent for the department could have been that they don't want to give ATG for 10 years. ATG, the intent is to have an oversight, maybe 5-year oversight before renewal, that whether the ATG was properly used or not, whatever. If that was their intent, then the ATG compliance should be routine in nature. ATG renewal should not be subject to extensive questionnaires, extensive documentation. So once an organization is continuing the 12-year registration certificate, then the ATG should have been a oversight renewal rather than a comprehensive scrutiny-based renewal. So in that sense, there is some kind of arbitrariness about not extending, and it is not fitting to the intent also. Even if the intent is to give a lesser tenure to ATG, then the compliance also should be lessened.
And sir, like we have discussed it multiple times, that the intent was to pass on the benefit to small charities, but like they have missed on ATG category, and they have missed on to pass on the benefits who are applying directly for regular registration. So whether the intended benefit has actually been passed out to NGOs or not, that has to be seen in the times to come.
No. Our understanding in the past has always been that the compliances for the charity sector made with the wisdom of the revenue are too extensive. So even if these compliances are to stay, it is practically not possible for small charities working in grassroots in villages to prepare a Form 10BB, to prepare documents as prescribed under the rules, there are 17, 18 categories of books and documents So it is quite unfair, and in that sense, the income tax laws don't promote smaller charities, the work of the smaller charities, which defeats the larger intent of our country and the government, is that the development should come from the grassroots, or the Gandhian idea of Swaraj. So the law is creating deterrence to smaller charities. So there has been a long standing need that a smaller charity should be subject to smaller compliances. So there are no relaxations as far as how smaller charities are concerned. Even a tenure of this certificate is not a relaxation in compliances. It is not a relaxation in that sense. And that also is not available. That also is not available to almost all the charities, because existing will not get, new ones cannot get if they have commenced activity. Only at the time of renewal, after 1 year, 2 year, 3 year, 4 year, some will get. So in that sense, it is more symbolic in nature, the amendment, but it does not ensure any real benefit to the smaller charity. The government has to do more to address to the issues and the structural problem in the law, which is in some sense victimizing the smaller charities. Suraj, you want to add something?
Yeah. Sir, the only clarity the government has tried to given is to define what can be the small charities. And at least, so at least up to 5 crore income without giving benefit of Section 1112, they are time and again saying that can be categorized as a small charity because 10 BB and now this registration period. And we hope in the income tax code, which is going to come, if they are giving some relaxation, the relaxation shall be for a small charities. That means which are having less than 5 crore income.
For that
So,
matter, even a much lesser limit of 1 crore rupees
Yeah, should
also
have been there.
go a long way to smaller charity if some compliance relaxations are given. The way we give them under tax audit. Tax audit also we have a considerable financial slab below which smaller businessmen are not troubled. So similar kind of a corresponding slab is necessary, because the Form 10B and the audit is more or less as or more complicated than the other tax audit which we are doing. So in that sense,
Yeah.
it is an impending thing which has to be addressed.
so rather
Yeah,
than
right.
just extended the validity of registration period, it would have been made more sense. They could have introduced a presumptive like scheme wherein they would have exempted from the requirement of audit and simplified ITR form. The ITR 7 is so complex that even the professional face trouble in understanding the how to fill the information and where to fill the information. They could have made some relaxations like that.
Yeah.
So now we shall move on to the next amendment, next proposed amendment, that the minor default in registration application shall not constitute a specified violation that is subject to cancellation. What is the present provision? Section 12 AB4 of the Income Tax Act provides that the Principal Commissioner of Income Tax can cancel the registration if they notice a specified violation occurring during any previous year. And according to the explanation to Section 12 AB4, the different type of violations are specified to constitute a specified violation. And this includes, among other things, the cases where applications referred to in Section 12A once AC, that is when the NGO is applying for a registration or renewal or converting the provisional registration to a normal registration, if those applications are incomplete or contains false or incorrect informations, only on those basis that constitute the specified violation and subject to cancellation of the registrations. Now the proposed amendment, what they have done away with, they have deleted the word is not complete, meaning thereby, if in the application is not complete, then this will not constitute a specified violation subject to cancellation. But they have intact the word, if the application contain false or incorrect information, then still this will constitute a specified violation. So at least by removing the word is not complete, at least gives some relaxation to the charities, because the cancellations means 115 TD means you have to pay tax at the fair market value of the entire asset. In that way, this is a welcome provision. But by retaining the word false or incorrect, we have to analyze how what shall be the implication for this amendment being made?
Sir, as you suggested that under clause G, they have deleted the incomplete word, that even if the application is not complete, it should not constitute as a specified violation, but they have retained the words false or incorrect information. Now, what shall be the implication of it? And what will be the consequences if there is incomplete information in the application and that results in the incorrect information? Because the words were used differently, incomplete or false or incorrect. Now they have just deleted the incomplete, but they have retained the word false information or incorrect information. So how the applications are to be handled in such cases?
Now, let us spend a minute or two on the larger intent of the law and the amendment thereof, and whether it is making sense at all. If you see, this amendment has been made under specified violation. What are specified violation? That if you do these violations, we will cancel your registration. So on one hand, if you make payments to specified person, if there are reports of misappropriation of fund by specified persons under section 13(1)(c), that has been deleted as a specified violation. So, and you will be taxed for that particular year for what was specified. You make violation under section 13(1)(d) regarding investment, that is not a specified violation. You don't fulfill the conditions of registration, audit, filing of return, maintenance of books of account, that is not a specified violation. But if you don't comply under any other law, that is a specified violation. And it is not stated in the act that what kind of non-compliance under any other law. So it is quite contradicting and paradoxical, the law which has been. So the idea of cancellation has always been that the commissioner should ensure that the organization continues to be a genuine charitable organization. If that condition is fulfilled, then all other violations should be left to the assessing officer. So that was the original intent when we had the cancellation provision under section 12A, or even prior to that when it was. But now, by adding so many violations, specific violations, we have created situations where ingenuine organizations may continue. For instance, an organization is misappropriating funds. In the name of the trustee, the commissioner may feel that this organization is not a genuine organization in the light of the misappropriation made, and the money was used for the benefit of breach of trust, to the benefit of trustees. That is no longer a violation. But smaller things, incorrect information, false information, and incomplete information. Incomplete information was quite weird. So that provision should have been deleted. It should not have been there in the first place. Incorrect information can only become a cause of action where the organization deliberately misinforms the department, and that incorrectness of the information has resulted in some benefit under the act or registration benefit. Unless that happens, how can an incorrect information be a reason for cancellation? So this continuing the word incorrect information will again be a bone of contention and maybe subject matter of future litigations. It would have been better to delete all these. False information is in any way covered. You don't need a special provision to initiate cancellation proceeding. If the organization provides false information, if the organization on oath or on affidavit is giving you wrong information, the department doesn't need a specific clause to cancel the registration. So in that sense, the intent of this clause is not understood and it is not serving any purpose.
Now we are coming to the third proposed amendment, and it is in the definition of a specified person under section 13(3). Section 13 of the Income Tax Act provides that section 11 and 12 shall not apply to exclude any income from the total income of a trust or institution if the income inures or if any income or property of the trust is used or applied directly or indirectly for the benefit of any person referred to in section 13.3. That means if the income of the trust and organizations applied for the benefit of any person as referred in section 13.3, then the section 11 benefit is being withdrawn and the amount is subject to tax on the amount of the benefit. What are the current provisions? Any person on section 13.3, among other things, they have also includes the person who is substantially contributing, and and they are also one of the specified person. And as per the current law, any person who has contributed to the trust or institutions of more than rupees 50,000 up to the end of the relevant previous year shall be regarded as a specified person. Meaning thereby, if any person has given in any year more than 50,000, he continues to be a specified person for all the years, not only in the year in which he has donated the money of more than 50,000, but in the subsequent years. And not only they become the specified person, but also their relative and also their concern in which they have substantial interest were also considered to be specified persons. So it was very difficult for a part of the NGO to collect these informations for a donor who is giving amount donation to us to ask for their relative, ask for their concerns in which they are substantially interested.
Become meaningless. So, into my understanding, and because the second limit also is 10 times more than the 1 year limit, I think unless the further clarification or a modified circular comes, this rule, no matter how bad it is, I think it would be safe to assume that aggregate detail in case now the universe has been reduced. Earlier it was donor who was given. Now 10 lakh and more, the universe would also be very small. Donors who have given more than 10 lakh rupees in the past. So in that sense, the requirement and furnishing the requirement has become little more easier and practical, and therefore it may not be very wise on our part to presume that the circular is not applicable. Maybe a modified circular. Till then, we should keep on reporting donors beyond 10 lakh as far as past.
Yes. I also see the validity in your argument, because the universe will be very, very less because relatives are excluded. There is no relatives. The substantial contributor excluded. Only the name of the donor. And that are available with the organization itself. So with that logic, the universe becomes very, very less and limited only to the donor, which are the knowledge of the organization. I think Circular 17 should not apply if that logic.
Sir, now what will happen if HUF is one of the substantial contributor if it exceeds the specified limit? Now, what things the auditor and the NGO has to keep in mind?
As per our understanding, substantial contributor, donor, they have not characterized which type of substantial contributor. He may be individual, he may be a company, he may be HUF. It doesn't make any distinction. Even if the HUF they are the donors. They are not representing in other capacity. They are not the settler. If in the capacity of a donor, this modification even apply to the HUF.
So but in one sentence, all donor, whether it is HUF or not, will be covered under this new amendment. HUF, the relatives of HUF, also that benefit also is available to the HUF. Only if the HUF is dual capacity, it is apart from the donor is holding some other capacity, then the other compliances will apply.
Tarun, you can now take up.
Sir, you can continue the PPT. Yes, sir. Now we have discussed the amendments which were directly impacting the charity sector. There were mainly 3 amendments. One was relating to the extending the validity of registration period. Second was amendment in the specified violation, and third was substantial contributors. Now there are another amendments which are not directly related to charitable sector but have an indirect impact on it. One of such amendment is extension in the time limit to file the updated return of income. So as we see to the conditions of registration, so under section 12A, one of the condition is that to claim the exemption under section 11 and 12, the income tax return has to be filed within the time limit prescribed under 139(1) or 139(4), meaning thereby you can claim the exemption under section 11 and 12 if you submit your income tax return by the due date to file original ITR or belated ITR. Now, 2 years back, they have introduced a special provisions under section 1310 and 1311, which gets attracted on specified violations, which states that if you don't file your ITR, then your income has to be computed as per the provisions of section 1310 and 1311. Now, in that cases, your ITR shall be subject to updated return category. So now, since the time limit to file updated ITR has been extended, so that shall be relevant for NGOs as well. So earlier, the time limit to file updated return was 24 months from the end of assessment year. Now it has been extended to 48 months from the end of assessment year. Now the additional tax has also been correspondingly increased. If you're filing within 1 year, the additional tax shall be 25%. If you're filing within 2 years, additional tax will be 50%. If you're filing within 3 years, additional tax shall be 60%. And if you're filing within 4 years, the additional tax shall be 70%. So in that sense, it is relevant for NGOs as well. The another amendment which is in the favor of NGOs, that is increase in the threshold limit for TDS deduction, because the provisions of section 40A IA mutatis mutandis also applicable to charitable organizations, meaning thereby they have to deduct TDS if they are making payment to the resident assessees. Otherwise, 30% of the application shall get disallowed. So these are some of the common sections in which the threshold limit of TDS has been enhanced. These are common section, like in commission, now it is 20,000. In rent, it is 50,000 per month. And for the fee for professional services, it is 50,000. So again, that will breather for NGOs. So these are some of the amendments which are not directly impacting, but has an indirect impact on the NGO sector.
Just to add, Tarunji, on the rent, they have not made 50,000 per month or a part of a month. So suppose
Yes.
you are taken on rent on February at a 1 lakh. So during the entire financial year, paying only 2 lakh. Earlier, you were exempt to deduct TDS because 2,40,000 was the limit. But now 50,000 per month, that means you have to comply with the TDS provisions.
So the limit is not annually 6 lakh, but it is per month, 50,000 has to be
per month. Yeah.
Sir, there are 2-3 questions which have come. Like one of the queries, if renewal of section 12A certificate, which was due in March 24, is not done, now what is the way out?
Suresh.
March 24. March 24, it can be only conversion of provisional registration to regular registration, because
Yes.
So provisional to regular registration, now condition power has been given to the CIT exemption. They can apply for a conditional petition stating the reasons, and once the condition is granted, they can apply. Or again, otherwise we have to see the reasons why it has not been.
All category of registration, if they have missed the timeline, now can avail condonation benefit. In the Act itself, the condonation provisions have been provided.
Yes. So Finance Act 24 has given the power of condone the delay to the Commissioner of Income Tax. So you can avail of that benefit and get your registration renewed. So another question is, if the income of the trust is less than 2,50,000, is he required to apply provisional registration or regular registration?
Is not required. So Suresh, you want to add?
Yeah, if they don't want to raise funds in future, because their income is less than 2.5 lakhs today, but it may go on increasing on subsequent years. So just by having 2.50 lakhs, they are covered under exemption limit. So technically, they are not required to be registered.
Sir, another common question which is going around after this limit of 5 crore, like classifying it as a small charities. Now, this limit has been used at 3 places. One is in the recently amended proviso, which says that they will be considered as small charities and their registration certificate shall be valid for 10 years. Second, it is used at like choosing the appropriate audit form, whether the audit report has to be filed in form 10B or 10BB. And similar quantum of 5 crore is also used under section 1023C. Where under the non-approval categories, the income of certain class of NGOs is exempt. Now, what is the relevance of this after this amendment?
No, this part has not been addressed. 1023C is with regard to the nature of the activity. A particular type of organization, educational and medical, are totally unregulated for that matter. Under 12AB, everybody is regulated irrespective. There is no limit available. So this limit is for registration requirement. There is no real. So it is a big area of discussion, but because we are running out of time, maybe we may not be in a position to address this at this point of time.
So I think since we have already...
Tarunji, only one clarification.
Yes.
One should not assume that where the audit report in 10B has been submitted, there becomes more than 5 crore. Or on the case where only 10BB is submitted, there becomes less than 5 crore. So 10BB is okay, the less than 5 crore, but 10B cases is also there because of the FCRA contribution. So even for the 10B cases also, they have to examine whether their limit is less than 5 crore or not, and they are eligible for 10-year registration.
So form is not the criteria, but the quantum of income is the criteria. So I think we can conclude now. I'll hand over the session to Divya if there are any queries, or we can.
Thank you so much to all three of you for this much anticipated and in-depth analysis. Thank you so much. Tarun, as of now, there's no queries as you have covered everything already.
Okay. Thank you.
Thank you.
Thank you.
Thank you so much.